Okay, so for this next video lecture, so we will be discussing about the discussion among the engagement team members concerning the fraud. Okay, so this is done if the audit will be performed by a team. Okay, so in PSA 240, this requires a discussion among the engagement team members, and it should include an exchange of ideas or brainstorming among the engagement team members about how and where FS are susceptible to material misstatement due to fraud, how management could perpetrate and conceal fraudulent financial reporting, as well as how assets could be misappropriated. So, meaning to say, in this case, they should formulate hypothesis probably on the uh, suspected existence of fraud or misstatements due to fraud in the FS. Okay, as well as exchanging of ideas on how it may occur, and with the participation of the management, okay, as well as um, the concealment, okay, of these fraudulent actions, so that they will be able to consider these things in their planning for the audit procedures that they will perform. So the discussion should also place emphasis on the following. Okay, first, the known external and internal factors which affects the entity, which may create an incentive or pressure for management or others to commit fraud, um, to provide the opportunity and indicate a culture that enables rationalization of committing fraud. So, meaning there are factors that um, they should consider, which uh, influences, okay, the commission of fraud or fraudulent actions in or within the entity. So they should also discuss these things among themselves, okay, and so that to help them to plan the audit, as well as the strategies on how to detect it, okay, during the course of the performance of the audit procedures. Another is the risk of management to override the controls, consideration of circumstances that might indicate erring management or manipulation of other financial measures. So here, it's just exchanging of ideas and brainstorming, but of course they should avoid like placing a negative uh, impression on the entity. So this is just what ifs, okay, in their discussions, so that they can plan ahead and formulate strategies to detect those fraudulent actions. Okay, another is the importance of maintaining professional skepticism also throughout the audit. So again, this is not believing of anything that they receive as a representation from the entity. So before believing it to be genuine, they should gather sufficient appropriate evidence to support their belief or opinion. Another is how the auditor might respond to the susceptibility of the entity's FS to material misstatements due to fraud. Okay, so this will help them in designing the responses, okay, of the procedures that they will perform to detect those misstatements. Okay, so those are the discussions that they should um, do among the engagement team members concerning fraud. So we will proceed with the next topic, which is about the auditor's risk assessment procedures in identifying risk of material misstatement due to fraud. So when performing the risk assessment procedures, the auditor should ordinarily perform the following procedures, okay, to identify if there are risks of material misstatement due to fraud. Okay, first is to make inquiries of management, and others within the organization concerning the management's assessment of the risk of FS that it may be materially misstated due to fraud. But of course, in this case, the auditor should also consider, okay, the understanding of the internal control, okay, because internal controls will help the management in preventing, detecting, and correcting any fraud that may exist. Okay, aside from the internal control, their risk assessment as well of any misstatements that will be due from fraud. Okay, again, this is the responsibility, or this should be, or this must be the responsibility of the management. Another is the auditor should also inquire about the management process for identifying, responding, and monitoring risks of fraud. So this is part of the risk assessment of the entity or the management. Another is the management's communication to those charged with governance concerning the risks of fraud. Okay, so how it is reported, or is it reported properly? Okay, and is there any actions that that is made by those charged with governance to correct, okay, or uh, prevent any misstatements or fraudulent actions in the future, okay, and so on. Another is communications or management communication to employees regarding its views on business practices and ethical behavior. So here, this will be a part of the auditor's understanding of the entity, okay, and their organizational structure or control environment in which he should determine if in their organizational culture, ethical behavior and principles are being followed, okay, so that this will be as this will serve as a deterrent also in, or for deterrent for the entity in avoiding fraudulent or illegal actions because they uphold ethical principles and behavior. Okay, another is management knowledge of actual, suspected, or alleged fraud. Okay, so this information, however, will depend if the management will be honest enough, okay, to share this with the auditor. But for the purpose of understanding, okay, on the part of the auditor, the management should be open, okay, if they will not provide any actual uh, example of their um, the information. So the auditor has I mean the auditor cannot do anything about it. Okay, so this is on the part of the management if they will open it with the auditor during the discussion and inquiry. Okay, so another um, thing is the auditor should obtain also understanding of how those charged with governance or audit committee identify and respond to risks of fraud, and he should make inquiries to determine about their views on the risk of fraud, whether they have knowledge of any actual, suspected, or alleged fraud affecting the entity. So again, this will be part of their discussion along with that of the previous concern, okay, which the auditor should also inquire of from the management. Okay, another is perform, or the auditor should perform analytical procedures, okay, to evaluate whether unusual or unexpected relationships have been identified. Okay, so this is using non-financial and financial data, okay, to support his understanding, okay, of those things, as well as inquiries and even observation. Okay. Another is consider also, or the auditor should also consider information from other sources, such as their discussion in the team or in the engagement team members, the information obtained during the client acceptance or retention process, as well as information from other engagements, or even from the predecessor auditor if that is allowed by the management. Okay. And lastly is to evaluate also the fraud risk factors that may exist or affect the entity. Okay, so those are the things that the auditor should do when performing risk assessment procedures. Okay, to identify the risk of material misstatement due to fraud in the entity's FS or in the entity in general. Okay, so we will proceed with the next topic about the process of identification and assessment of the risk of material misstatement due to fraud. So how does a risk of material misstatement due to fraud is identified and assessed? Okay, so here the auditor should identify and assess the risk of material misstatement due to fraud at the FS level, okay, and at the assertion level as well for the classes of transaction, account balance, and disclosures. And this process is ongoing throughout the audit, okay, because there might be, or the auditor cannot assess the risk at the beginning of the audit, in the middle, or at the end. So throughout the audit process, as he goes along gathering audit evidences, there might be some uh, information or evidence that will call his attention and or drawing his attention towards um, fraud, fraudulent or misstatement due to fraud. Okay, so that's why it is said to be an ongoing process all throughout the audit. So in identifying and assessing the risk of material misstatement due to fraud, the auditor should also include presumption that there are risks of fraud, especially in revenue recognition, because most of the time this is where the management normally, if that is due to pressure, for example, they have some targets in terms of revenue. So if for example they did not meet it at the current period, so probably uh, they will do some fraudulent financial reporting to falsificate, okay, or to change the amount of their revenue, or to recognize revenues which are not recognizable yet, so that it may appear in their FS that they have higher revenues, and so on. Okay, so for instance, fictitious revenues may be recorded by the client. So that is an example. So the auditor should also treat those assessed risk of material misstatement due to fraud as significant risk, of course, since this is due to fraud, intentional actions to conceal, to falsificate, and to deceive the public. So basically, this should be treated as significant risks. Okay, and accordingly, to the extent not already done so, the auditor should also identify the entity's controls that address such risk, and he should evaluate their design and determine whether they have been actually implemented properly. Okay, if they are able to prevent, detect, or correct any fraud or misstatement due to fraud. So the overall responses of the auditor in addressing the risk of material misstatement due to fraud at FS level should include the following. Okay, so this will be the auditor's response. First is assigning personnel which has the appropriate knowledge or skill and ability. For example, in IT or forensic experts, okay, to help them identify thoroughly if they're really misstatement, okay, due to fraud or error that exists, and how to detect it, okay, or what types of evidence will that will support, okay, to determine its existence. Another is to evaluate whether the selection and application of accounting policies by the entity, particularly those related to subjective measurement, meaning there are options to be or that the entity can use, they can choose from different approaches. Okay, and complex transactions may indicate fraud. So normally in this case, they can override, or um, they might have some interpretation that they know which is not correct. Okay, however, due to pressure, for example, they will apply it. Okay, so as a result, it will be misstated. Okay, or the FS will be misstated. Another is because of the complex transactions, um, to simplify things, so they might falsify or forge some data, okay, to present it in their FS. So basically, from this will result, I mean, to misstatement due to fraud. Okay, so um, this should be considered as well by the auditor. Okay, so as a response, he will evaluate such things, okay, thoroughly. Another is the auditor should also incorporate an element of unpredictability in the selection of nature, timing, and extent of audit procedures, such as performing a substantive procedure on the accounts not otherwise tested due to materiality or risk, adjusting timing of procedures which uses different sampling methods, and performing audit procedures at different locations or at locations on an unannounced basis. So this will be the response of the auditor, okay, if he knows that there are misstatements due to fraud. So here, he will do more substantive procedures, increase the sample size to be tested for audit evidence gathering, and to perform audit procedures on an unannounced basis. Okay, another is the auditor should design and perform further audit procedures whose nature, timing, and extent are responsive to assessed risk of material misstatement due to fraud at the assertion level. So this time, in the assertion level. So what should be the auditor's response in the misstatements due to fraud? Okay, so first is to obtain more reliable and relevant corroborative information. Corroborative meaning uh, different sources of evidence which confirms, okay, the other evidence, or dispel the other evidence. Okay. Another is the auditor's response is to obtain information at or near the period end. So this is timing, because in this or at this period, most of the transactions are completed, and it is also the period where the management are going to prepare already the FS. Okay, so the the FS, as well as the necessary audit evidence that the auditor will need, okay, will be almost completed and present at that period. So that's why he should perform such at period or near end, or at period end. Okay. Another is he should increase also the sample sizes or perform analytical procedures at more detailed level. So he will the extent is extended, okay, to gather more evidence. Okay, so the auditor should likewise perform audit procedures to which is responsive to risk related to management overrides of controls. Okay, so this, because this is also a form of fraudulent actions, which involves the management. So although the risk of management override of controls will vary from entity to entity, Um, but the auditor should consider it that it can be present in all entities, but in differing level and um, extent. Okay. So management override increases the risk of material misstatement due to fraud, and this is considered as well as significant risk. In fact, as what we have mentioned before, when management or those charged with governance are involved, these are the most difficult um, misstatement due to fraud to detect because they are able to conceal it, which will be very difficult to detect. So in relation to this, the auditor should, so this will be the response of the auditor. Test the appropriate journal entries made in the preparation of the FS, which includes entries posted directly to financial statement drafts. Okay, so meaning he will do the audit from the beginning of the recording of the transactions. So instead of just checking the FS, you should go back to the source document probably. Okay. Another is to review the estimates for biases or and evaluate whether the circumstances producing the bias represent a risk of material misstatement due to fraud. Okay, so he will um, check and confirm it with the applicable financial reporting framework and also apply his professional judgment to do so. Another response of the auditor is to evaluate whether the business rationale of the significant transactions that are outside the normal course of business for the entity or those transactions that appear unusual suggest that they may have been entered to engage in or conceal fraud. However, in this case, the auditor should also make sure that this unusual transactions has the contracts or supporting documents. Okay. If there is none, then it is very difficult for the auditor to substantiate the suspected fraudulent action which involves the management or those charged with governance. Okay, so when the auditor identifies a misstatement, the auditor should consider whether such a misstatement is indicative of fraud because error or misstatement due to error again is it can easily be detected. However, fraud is difficult. So if there is such an indication that there is fraud, the auditor should consider the implication of this misstatement in relation to the aspects of the audit, particularly the reliability of the management representations. So that's why you should um, gather corroborative evidences. So for instance, the fraud involving theft of cash from a petty cash fund. So this is ordinarily of small implication to the auditor. Okay, because in this case, this is petty is just a small amount. Okay, most probably this can be uh, committed by the employee and not and does not involve the management. So conversely, when the fraud involves those charged with governance, even the amount involved is immaterial, so it may be an indication of a more serious circumstance. So in this case, if the auditor found out that even with a small amount of theft, but it involves those charged with governance, so there might be something more than this, okay, which leads to the auditor's belief that a greater or material misstatement due to fraud exists. Okay, because in this case, why did those charged with governance are involved even with a small theft of cash? Okay, so there is something wrong about it. So if the auditor identifies a misstatement, whether material or not, and the auditor has reason to believe that it is or may be the result of fraud, that the management and those charged with governance are involved, So the auditor should re-evaluate the assessment of the risk of material misstatement due to fraud and its resulting impact on the timing, nature, and extent of the audit procedures to respond to the increased risk. So in this case, again, if management and those charged with governors are involved in the fraudulent action, so this is considered to be a more significant risk. So meaning the auditor should gather more evidence to support his opinion. Okay? And to detect more misstatements related to it as well. So the auditor should also consider whether circumstances indicate possible collusion involving employees, management, or even third parties which are outside the entity when reconsidering the reliability of evidence which were previously obtained. So this is very um, uh, strenuous, okay, on the part of the auditor, because he should reevaluate his evidences which was obtained before, as well as to gather more evidence now, because it was found out that there are more who are there are other parties, even the management and those charged with governance are involved in fraudulent actions. So, when the auditor confirms that or is unable to conclude whether the FS are materially misstated as a result of fraud, the auditor should consider its implication on the audit and its impact also in the auditor's report. So, basically, in this case, the auditor might modify his opinion, okay, or even in some cases, because of some limitations, probably. So he can even withdraw from the engagement. So if as a result, a misstatement resulting from fraud or suspected fraud, the auditor encounters exceptional circumstances that bring into question his ability to continue. This is what I am talking about earlier. Okay, to continue to perform the audit. So the auditor should determine applicable professional and legal responsibilities and consider also whether it is appropriate to withdraw from the engagement. Meaning, if during those detection of misstatement, the auditor is not able anymore to gather sufficient audit evidence because of the overriding of controls by the management and those charged with governance. So in this case, he should either determine the applicable professional and legal responsibilities, okay? Or he can ask some expert or legal advisors on what to do about it, or else, or I mean, the last resort is if he cannot do anything about it, then he can withdraw from the engagement, because there is now a limitation on the gathering of information, sufficient appropriate audit evidence to support his opinion. Okay? So if the auditor withdraw from the engagement, so the auditor should discuss the reasons for his withdrawal with the appropriate level of management or even those charged with governance. Also, the auditor should assess whether a professional or legal requirements exist to report to persons who made the audit appointment, or in some cases, to the outside regulatory authorities. So he should also consider if he should report this matter to those who commissioned his service, or even to the outside regulatory authorities which are concerned, okay, with the type of fraud that exists in the entity. Okay, so those are the process of identification and assessment of the risk of material misstatement due to fraud.